Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2025 question number 36. Let's see that this is related to accounting concept. Look here. What is the requirement? State the accounting concept. Look here. State the accounting concept that is most appropriate to each of the following situation of a manufacturing firm. That's a manufacturing firm. State the accounting concept. We must identify accounting concept that is most appropriate to each of following situations. There are 4 situations there of manufacturing firm. Look here. First one, recognition of the depreciation of a machinery used in the production process as an expense. Look here, recognition of depreciation. Depreciation is expense, no? For the machinery used in the production process as an expense. You know, there is a expense identification. There is a expense identification related to which concept? Which concept? Matching concept. Matching concept. Matching concept. What is the meaning of the matching concept? Matching concept means we must identify the expense. We must identify the expense to supply to help generate the. We must identify. Look here, I write this. We must identify expense to help generate income. You know, there are so many incomes there. There's a sales income, other service income. There is some income generated. In that time there are so many expenses that help to generate this expense, like electricity expense, support to indirectly to generate income. At that point, this is a machinery. Machinery is indirectly support to income generating unit. Income generating. Why? Based on the machine they produce some products. After that, product sales income is generated. Therefore, the income generating point, there is an expense. Machine was depreciated. Therefore, this expense is help to generate the income. Therefore, there is a matching concept. Matching concept means we must identify the expense related to the income. Therefore, expense identification related to the matching concept. Therefore, answer is matching concept. Matching concept. Matching concept. Okay, let's see the second one. Preparation of general purpose financial statements annually, year by year. This is the major point, is annually. Preparation of general purpose financial statement annually means period by period they prepared financial statement. Periodic concept. Periodic concept. Okay, let's see the third one. Preparation of note to the financial statement to reflect movements occurred in the property, plant and equipment during the year. You know, preparation of note to the financial statement. There are so many notes. Reflect the movements occurred in property, plant and equipment during the year. You know, there is a major note is property, plant and equipment note. Why we prepare the property, plant and equipment note? There are so many variation, deductions, additions there. The all information, all deduction, all impacting values we must reflect in note. Therefore, the all information supplied, we hope all information supplied to the stakeholders to reading, At that point there is a reflection. Why? There is a disclosure to stakeholder. What is the concept? Is the all information supplied to the stakeholders is disclosure. Full disclosure. Look here. Full disclosure. Concept. Okay, next one. There is property plant equipment. All transactions, there's 9% transactions are disclosure to stakeholders. Therefore, we must identify as a concept, full disclosure concept. Okay, let's see. Final one. Non-recognition of of 500 compensation. There's a compensation which is expected to receive by the firm due to the pending litigation. There's a pending litigation means there are no approval, no specific final result. The pending litigation means there's a legal compensation is there, but the final result is not identified. Therefore, you clear the expected receive. Expected receive means there is a asset, no? You know, there is a concept is there. What is the concept? There's a pending asset, no? There is a pending asset. You know, prudence concept said that what is it? We must identified income and assets. Deducting. We must all income and asset identify, not overvalued. We must try to identify the income and assets undervalued. Okay, undervalues. Why? The income. The other thing is expense and liabilities. This is the happy area, income and assets. Therefore, we must, at the preparation of financial statement, we focus to not overvalue the assets. Why? There is over happy, there is a danger area. Therefore, to security, we must not overvalue the assets, and we must not undervalue. Not look here. This one is not overvalued, and this should be not undervalued. Why? There is expense and liabilities unhappy, there is a danger area. Therefore, we must not undervalue this danger area. We must identify these dangerous areas. But the happy thing, we not focus to. Why? There's a pending asset, there's a pending happy. We must not identify as a current happy thing. Okay, in that point, this is the not recognition. There is a very good thing, not recognition of 500 compensation which is expected to receive. There is a asset, this is a pending asset for the firm due to the pending litigation. There is no result there. Therefore, we cannot sure about this asset. There is a prudence concept. Impacted concept is prudence concept. This is the answers. Okay, let's see. The next one is non-profit organization related question. In next video we must meet question number 37.